three things. One, we knew that this was the underlying overall macroeconomic scenario where we saw that despite a very strong wedding season, some of these industries did lag because of the rural effect and so on. I would definitely think that Titan has been the outperformer mainly on the back of the wedding season, the spurt in gold prices. But at 3,800, there is no room of comfort. We have booked out of Godrej Consumer and we are upping our stake in Marico. We think the price performance and the valuation now give us enough comfort on Marico to be an outperformer. We've also upped our stake in Nestle, and we think Nestle will continue to be the outperformer in the FMCG space. As a disclosure, we don't track Nykaa. We are more bullish on the fintechs, like we told you, on Paytm and PB Fintech. But in this space, I think it will be Colgate, Nykaa, Marico, and Nestle, which will continue to be outperformers in the FMCG space. The comeback in Idea should be a blessing in disguise for Indus Tower. They've consolidated, got more, acreage from Brookfield, and I think the receivables will now become even faster. And we know that in Indus Tower, they have a lion's share of the market. And I think once the receivables are back, this stock on an IRR can give you excellent return. So for this quarter, it will be Indus Tower on the back of results, in the back of positive developments on Idea. SW Solar is my stock for the year. 750 se kam mat bechna. The book is doing extremely well. It's a debt-free company. It has an order inflow of almost 40,000 crore in FY24 with a 24-25 with not a single order from the parent. There is a 12% MEP margin. And I think solar panel and the energy side is extremely good for this stock. So this stock can be an outperformer from here. And third, last but not least, DCB Bank. Read my lips. 15 years of underperformance was too much of an overhang. 0.9 time price to book. Aga Khan putting in more capital at a premium. And look at the peer group of L&T Finance. It's now quoting at double the market cap of what it was. And in the same range of business. So convert that into DCB Bank, but this stock is headed to 250. What can you say? You know, it's the last hurrah. When you miss the bucket, then you come back. So, you know, not to comment on any of these names, but these are the perfect examples of greed and fear. When they were fearful, you should have been greedy. And now when they are greedy, you should be fearful. On a lighter note, take profits off the table. There is a lot of froth in stocks and sectors which have underperformed or not been in the portfolio, particularly the power, railway, defense, and the OMCs. I still think there is upside in those stocks, but after a little bit of a correction and consolidation, wait for numbers to come. We've had a buy on IOC and BPCL and HPCL from much lower levels. So I think, like I said, Nikunj, these are now brokerage reports which are trying to catch the froth right at the top. So be watchful. If the bond index happens and you get included, State Bank will be laughing its way to the bank. FY23, 50,000 crore. This FY24, they will be coming out with 68,000 crore profit. And next year, you are talking of 80,000 crore. Price to book 1.9 times. 52 lakh crore balance sheet, 7 lakh crore housing loan. How can you go wrong? And you know, State Bank has done actually nothing. PNB was 50 and State Bank was 600 and State Bank is 630 and PNB is 100. So if I have to put one stock in my large cap list, which is giving me extreme safety for a target of 750, it is State Bank. Secondly, look at the numbers from Maruti. 230,000 retail sales in the month of December, which is arguably the most weak month, given that people want to get rid of inventory. And they are saying this is the highest in the history of the company. So at 10,000 rupees, Maruti is giving a screaming buy for a target of 10,500. And last but not least, Indus Tower. In this whole Vodafone's game, which is going on for capital infusion, it is now evident that Vodafone has survived. And now with Grasim putting in money into Vodafone, Vodafone itself may come out with the rights. Indus Tower will be the one which is laughing its way to the bank because receivables come, ARR and IRR both will improve. And we know that tower business, they are the market leader with a 53% market share. So these three stocks are on top of my buying list. That is why the price is at 800 Avan, and that is more than doubled. And on the back that JLR is not just China. In India itself, there is a big desire for Land Rover and the new version. But I think it's all in the price. I still think Ashok Leyland is my top pick in that sector. But, and I would go with Maruti, which has come out with stellar numbers. But yes, Tata Motor is something we own. We are not increasing our size over here. In fact, we are reducing some of our weightage. But like you said, if China does make a comeback, which is very strong, and which, yesterday I was reading the China's central bank saying that they are going to use their reserve ratio very, very actively to revive credit. And that will be a blessing in disguise for, their consumption and some of the metals there. So buy on decline would be the strategy. But Tata Ashok Leyland will be the star for the next a few months in the four-wheeler space, along with Maruti. That was bound to happen. I think mid caps can still undergo some more correction, and that is much needed. But large caps, on the basis of earnings, on the basis of macro, on the basis of bond inclusion, on the basis of foreign buying, will continue to be the ones. So we are, like we said, we are 65% now on large caps, and we continue to be very, very positive there. That is where the real, I think, value remains. So like I said, 21,500 has got defended twice. We should see 22,000 maybe in the next week, and we'll take it from there. Given that now a lot of consolidation in the US and overseas in India has taken place. So I still think it's the index, the large cap, which will move. Bank Nifty should be the one which should, really charge things up, because their numbers will be very, very optimistic. I mean, bank earnings should be the best in this quarter. JP Power, when I came to your studio on 15th September, I recommended at 8.5, and I said, buy it and forget it. It has hit 17.5 yesterday. JP at 11 rupees is now 24, and we know the story of Vodafone. So yes, sometimes if you have the real valuation metrics on the market cap, on the scenario, you can make multi-baggers. GMR is something which I've been chasing and recommending from 35. I still think Avan OMCs are a buy, a screaming buy, given that their, the Russian episode has played out very, very well for them. They refine both soft and hard crude, and numbers from particularly IOC, HPCL will be stunning. So we have an overweight on IOC out of all the three. HPCL, we are not chasing it because it's gone up very, very fast. But I think this is a very, very good space, which has just started. If Nuresh can concur with that. I mean, years of consolidation, but 240 HPCL is suddenly 440, and 90 rupees IOC is 130. I still think there is room on the upside. And there are very good classical play of the business, which is doing extremely well. That is part and parcel of some ETF outflows. We know that the Bank Nifty had run almost 4,000 points in December. In December, and I think there has been a reasonable amount of profit booking there. But I think earnings will be the surprise packet there. Now markets can be, both greed and fear on a regular basis. But I think banks are the one where you should be. Actually, large cap private banks are looking extremely attractive. So the only problem there has been that they are over-owned, and hence any slight ETF selling or dollar strength will see them react to that. I think this reaction in the last 2 days is more with the yield in the US going up. But on the other hand, Indian yields have fallen because of this inclusion in the bond index, both by JP Morgan and now Bloomberg. All that means that yields are going to be softer, and I think NIMs will increase over time. Secondly, Aisha, look at the type of capex you're seeing across the board, from large corporates to MSMEs. So private banks will be part of that. And on the government side, extra budget in defense, railways will mean that State Bank will actually bear the maximum amount of lending over there. So I am relatively optimistic on the banks rather than the other, the rest of the market. Look at the activity. Look at real estate stocks. If real estate stocks are getting re-rated on sales, the input conduit has to be steel and cement. So no two ways. Add Ultratech, add Ambuja, add Dalmia Bharat into your portfolio on this correction. Cement will be a no-brainer right up till the elections. And you will see more cause of price hike come as soon as the weather possibilities increase. See, cement is in a cartel place. There's a 58% of the market is owned by 5 big players. Ultratech has the market share of 138 million tons, and no question about it that volumes are the strongest they've seen. And I think volumes will make up for the slight bit of correction in prices. I think prices again will start to rise from February as input costs start to go up because coal prices have again started to rise. So we are overweight on this sector, and we think select stocks continue to be very, very attractive, particularly Ultratech, Ambuja, and Dalmia Bharat. Yesterday also I told you there will be a 10% knee-jerk reaction, but smart money will buy, and smart money did buy at that 240, 245. We did add some of it for our clients. Even though the noise is raw, noise is going to be loud, I think it is more of rumor mongering by channels and other, constituents. I am very sure that the merger goes through. And imagine, Avan, what a MNC stock will or a company you will see in the next few months and few years. There is no way that Sony is going to not go to the last mile. And I think it's just a matter of compromise. As soon as you see the back of the Goenkas, this stock will hit 20% circuits. I can, vouch for that. You can get me online that day. Give HDFC and Reliance some space. The market caps are way beyond any of the others. They do have a bearing on the index as such. And, the smart money which plays the ETF does use the index as a bearing. But I think there will be deliverance of results in the next maybe fortnight, which will again set the cat amongst the pigeons that you must have this in your portfolio. I would expect State Bank and Kotak to lead the earnings front from the front. And I think that this is a time, if you want to be in the market, that this is the time you should be adding these banks, particularly the large cap and the heavyweight SBI, because you cannot but make money over a period of time. In the short duration, yes, there can be another week of consolidation, but I am very, very positive. I think the Bank Nifty itself now will be the one which will lead the charge to 50,000 before the budget. The biggest business, at least in India, is religion. And religious tourism has got so much of credence. And, I do a lot of tourism. Whenever I go, wherever I can, I do a lot of my visits to most of the temples and so on. And I observe over there how religion over there in each smaller tier 2, tier 3 city is worshipped and so on. So I have a clear mandate. IRCTC is headed to 1,200 rupees over this year. And Indian Hotel is again shining like a jewel. Nikunj, yesterday we had some bookings to be done for people. I'm heading to Indore just around the budget. And you won't believe there is no room available below 10,000 rupees. I mean, even average three star, 4 star, for some. So you can imagine room rates are going through the roof, and the demand is unsatiable. So I think clearly the winners are going to be Indian Hotel and the IRCTC. Also, if I can say, Indus Tower is the largest player in setting up telecom towers. And I think that once you have more visibility there, that would be another place where 5G connectivity and the whole host will be on a very, very large scale. So as a disclosure, we've had coverage on Indus Tower. We think the biggest beneficiary of Vodafone survival and now a capital infusion will see return of capital to IndusInd, which will see a very big dividend. And 5G connectivity and more towers is seeing the roost. So Indus Tower is a stock which I think can be re-rated all the way to 300. Pharma stocks have actually been the outliers, if I can say, particularly Oro Pharma, Lupin, which have been two of my favorites and in my portfolio. I continue to think the pharma ETF, particularly the SBI and the other Reliance one is extremely positive. So if you want, do that ETF flow over there, because the news flows regarding generic and other is getting only more positive. Plus you have the diagnostic space, which is again doing well. But for that, like I said, an ETF will be a better play, or a mutual fund in pharma will be a better play, because you will have a basket of that. As a disclosure, both Lupin and Oro are in our portfolios and have been relatively big outperformers. Well, Shriram has been a clear outperformer on the back that in the second-hand market, they have only gathered steam. And you know that the delay in the car supply because of logistic and semiconductor, it meant that the second-hand market was raring to go. Shriram Finance is one of the largest lenders there, and they've only gained market share across the board. It's an expensive stock. It has run up a lot, but it still be an outperformer. I would put my money on LIC Housing. I think as a mortgage lender, it went through a lot of underperformance, but now that underperformance is turning out to be outperformance. So I would say LIC Housing is one stock which I think in the NBFC stroke mortgage space is looking very, very attractive. I've already spoken about DCB Bank. You know, DCB Bank is another, it's not an NBFC, it's a bank which is really changed its module of lending. And what L&T Finance is now gaining market share, DCB is already in those businesses of auto, agri and gold loan. And I think this stock, after so many years of consolidation, is looking very good at not even one-time price to book. So I have a target of 250 in DCB Bank. I think it could be the small mid-cap bank or NBFC stroke financial outperformer in 2024. But I definitely think that corporate governance at 22,000 has to be the key. So be watchful of, that is why we are saying certain mid-caps have also made a lot of noise. Be watchful of the actual facts and start. That is what we are saying. Be overweight on the index because you have enough large caps there which have cushion of corporate governance, visibility, transferability, and everything which keeps you participating and where market will again reward you over time. This Polycab thing, I think I will reserve my opinions as the case plays out because it is involving the tax department, but it will definitely sour the sentiment on some of the large cap, mid caps, which have been huge outperformers. I think now with ease in inflation, ease in US soft landing, all that bodes well for the large cap. So stay with the best of the best, and we continue HCL Tech, Wipro, Persistent, Coforge, LTTS. These have a very, very good pipeline business. And by the way, Nikunj, actually, mid-cap IT has far outperformed the large-cap stocks. And now the valuation comfort is more on some of the large-cap players. Like I told you, my son's restaurant in Gurgaon has Zomato, which was making 25% margin. And 2.5 years back, he was not making money. But so I invested half of the capital in Zomato, and that has made more money. But now he tells me that Swiggy is doing extremely well. I'm just giving a brief. Swiggy is getting very, very competitive. It is giving much more bang for the buck. And he is very, very happy with the new change of business with Swiggy. So I think both these businesses are, it's a duopoly. I think there is enough room for them to grow. They have been innovative in their AI and other approaches. There is even talk of drones being used now in order dispatches and so on. So, fintech and this food is doing extremely well. We have it in our portfolio and we continue to be very bullish. But, Avan, I also want to reiterate my bullish stance on Paytm and PB Fintech. I think these are two quality fintechs which must be in your portfolio. Irrespective of the price, the business model is superb. I would say take it with a glass half full because you must add some of the NBFCs or the small medium banks which are doing well. And yes, PSU mid-cap banks, but I still think State Bank has way to go. This quarter numbers will be very superb. Last year, State Bank did a net profit for FY23 of 50,000. This year it is 63,000 in FY24, and next year it will be close to 80,000 crore. So you cannot miss the large cap giant of SBI not doing. I think SBI is still the most undervalued stock in the entire banking pack. At 1.9 times, a balance sheet of 52 lakh crore and a housing loan book of 8.5 lakh crore. I would still with State Bank. LIC Housing and AB Capital are two stocks in the NBFC space which are in our portfolio, and we think they can be outperformers. And DCB Bank, that is our small cap dark horse, which can be a huge outperformer this year. Cash earnings on a 60,000 crore, 15,000 crore EBITDA, which is 25%. Where can you get a company like TCS? And a constant earner. Now, there has been attrition problem, there has been inflation, but that's settling down. I was amazed at how fast they've developed teams for the AI and so on. So I think IT is all about adaptation. And we are in a process where our companies are now, the best in the world as far as outsourcing, as far as adaptation to cloud AI. I am very, very positive. I think Infosys numbers were relatively much better than what the street was making. And I would expect from here HCL Tech and Wipro to pleasantly surprise. I think these are two stocks which are in our portfolio as a disclosure, but we recommend that you add on HCL Tech and Wipro in the large cap space. Look at the export market of Bajaj Auto. Hero also is now having its highest figure of export. Secondly, their adaptation to EVs is telling us that they are very, very well geared for that revolution. And, rural incomes marks the beginning of consumption pattern. Now, the stocks have, actually have been the best performing I have seen in many, many years. I still think there is more steam, but, it had more or less priced to perfection. On the other hand, where do you expect Bajaj Auto to come out with a 4,000 crore, buyback and a very conservative management at that? So I definitely think these stocks are priced to perfection in the near term. But since they are in a very good sweet spot, we would wait for earnings to be the next barometer, whether the stocks are fully priced or there is more upside or downside. We don't cover SpiceJet. There are too many riddles in the puzzle over there, and leverage. They are two players, so obviously it's gaining share. But I think Vistara is not a listed stock. I continue to play Indigo, but Aisha, don't miss the infrastructure. GMR is at new highs. From 1 year, I've been saying that air traffic is going through the roof. Where did you expect now? Fifth, airstrip also coming along on a runway. Thirdly, play it through Ashok Leland. As Indigo expands, Ashok Leland is the bus which carries you from the airport to the terminal and to the plane. And that is only, they've got record orders. Ashok Leland has 53% of the bus market in India itself, third largest in the country. So we think Indigo, GMR and Ashok Leland is the right way of playing all these three for no specific reason, but SpiceJet for us is an avoid. That is what the problem is, when these type of rumors or unsubstantiated things come, the first thing which a foreign FI will do is sell. Forget about the news. This is generally the reaction which is there. First, take money off the table. Now, these stocks, when you want to enter them, they have a high impact cost, and when you want to exit till 20% on 2 days, you are not able to exit. So that is the uncanny part of being in mid caps, because entry and exit is always a problem. I am not going to comment on the news, because that is again something which is based. No company will agree that they have done any wrong. It will be a matter of time, and we will wait for the authorities. The stocks were maybe overpriced to an extent. The underlying business remains good. We still think KI Industries, Finolex Cables are two blue chips which you must own. KI Industry is in our portfolios. We like KEC International a lot, which is a similar, towers. And so do your homework, use this opportunity. But again, I reiterate, just now more large caps give us more presence of corporate governance, no issues, visibility. So I would rather be more in State Bank and Reliance than in some of these stocks which have already run up far in excess of valuations. I would still play this through IRB Infra, which actually owns 24,000 kilometers pan India, and on FASTag is one of the best plays. I have had a buy as a disclosure from 16. It hit a new high of 48. I still think this stock can go to 60. But do your homework. Pick up some of the capex stocks which you are looking at. Pick up the largest banks which are going to be the lenders. And I think you'll have a perfect potpourri. I stuck my neck out before Diwali at 16 lakh crore. I said the market cap will hit 20 lakh crore. And by the grace of God, we've got there. Never underestimate a sleeping giant. He's just woken up. So if he's going to go, sum of parts was 3,000 now with Jio. I think now individually it will go to 3,000 plus Jio. So that is what is going to propel you to 2,200. IT stocks have given more favor to the bulls. And we are closing above 21,750 today for the week, for the month. That will be the highest close. Next week, a short at 22,000 as banks participate. And I think that you have a perfect combination. So yes, I am very bullish on Reliance. As a disclosure, it is in our portfolio. And we continue to have that as one of the pillars of the mainstay for our portfolio.
If you like this video, then like, share and subscribe to ET Now.